Hey everyone, well, welcome back to Talk Tickers. Today we're going to be diving deep into Live Oak Bankshares Q4 2024 earnings call.
Buckle up.
Yeah, get ready for this one. It's a wild ride through the world of small business loans, AI-powered banking, and a surprisingly optimistic outlook in a, well, let's just say interesting economic climate.
Yeah, what's so fascinating about Live Oak is their laser focus on small businesses.
Yeah.
A segment that's often overlooked by the banking giants, but they're proving there's not only profit potential there, but a genuine passion for, fueling American entrepreneurship.
Yeah, for sure. Okay, let's unpack this a bit.
Yeah.
Live Oak Bankshares reported earnings per share of $0.20 for Q4 2024, driven by strong loan production and revenue growth, offset by increased provision for credit losses. But what really jumps out at me here is their record loan production in 2024.
Right.
Totaling $5.2 billion. That's a 33% increase compared to 2023.
Yeah, and their loan pipeline is still growing, too.
Oh, wow.
It's up 24% year over year to $3.6 billion. So they're seeing strength across almost all of their lending verticals. So it really makes you wonder, are other banks missing out?
Yeah, are they missing the boat here?
By not catering to this market?
Right. It's like they found this sweet spot that everyone else is ignoring.
Totally.
And speaking of sweet spots, over 1/3 of Live Oak's loan portfolio is government guaranteed through the SBA program.
Right.
That's got to give them a serious advantage when it comes to managing risk.
Absolutely. It's a brilliant strategy that SBA guarantee mitigates a lot of the risk associated with lending to small businesses, allowing Live Oak to be more aggressive with their growth plans.
Okay, so they're growing like crazy and they've got this safety net.
Right.
But what about the elephant in the room, the economy? I mean, there's been a lot of talk about rising defaults among small businesses.
True, that's true. And Live Oak has seen elevated provision expenses in the second half of 2024, primarily driven by those industry default trends. Inflation and interest rate hikes have definitely impacted some borrowers, but, you got to remember they're still outperforming the industry average when it comes to credit quality.
Okay, so they're not immune, but they're weathering the storm better than most.
Right.
That's pretty impressive. But here's what I'm really curious about. How are they attracting all these small businesses? Are they just offering crazy low rates?
It's not just about rates. They're going after full banking relationships with their customers. So their business checking balances have skyrocketed to $215 million.
Wow.
A five-fold increase year over year. So this strategic move helps create stickier deposits and diversify their funding sources.
So it's like they're creating this whole ecosystem for small businesses, right?
Exactly.
They get their loans, they get their checking accounts, maybe even credit cards, all in one place.
Exactly. And that's where their technology focus comes in. Live Oak is actively exploring how to leverage artificial intelligence to streamline their operations and enhance customer experience.
Whoa. Hold on. AI and banking. Tell me more about that.
Well, they're not sharing all the secrets yet, but they've hinted at using AI for things like credit underwriting, fraud detection, and even personalized financial advice.
Wow.
So imagine a banking experience that's tailored specifically to your business needs, all powered by AI.
Okay, that's pretty futuristic. And speaking of the future, they're also making some interesting moves in their local market of Wilmington, North Carolina, right?
Yes, they're leveraging their strong presence there to become the go-to bank for small businesses in the area. It's a smart strategy. They're tacking into a market that often feels overlooked by larger institutions.
Right.
And becoming the hometown hero for these businesses.
I love that that's brilliant. By focusing on a specific geographic area that can really build deeper relationships and become a part of the community. It's like they're taking this small business banking to a whole new level.
Totally.
But let's break down exactly how they're achieving these impressive results.
Yeah.
Where's all this loan growth coming from?
So in Q4 2024 alone, they originated a staggering $1.4 billion in loans.
Wow.
That's a 45% increase year over year. And to put that into perspective, their small business banking team generated 54% of that, mainly through SBA 7A loans, which saw a 35% increase year over year.
So SBA loans are definitely a major growth engine for them. What about the other 46%? Where's that coming from?
So their commercial lending team brought in the remaining 46%.
Okay.
And it represented a 58% surge compared to the previous year.
Really?
It seems like they've got a winning formula across the board.
Yeah. Wow. Those are some serious numbers. And they're not just originating loans. They're growing that pipeline for the future.
Yeah.
Remember, their total loan origination for 2024 hit a record $5.2 billion.
Right.
a 33% jump compared to 2023, and they're sitting on a $3.6 billion pipeline, up 24% year over year.
Right.
So this momentum really makes you wonder what's fueling their success. Is there some secret sauce they've got that other banks are missing?
Well, one thing that really stands out is their focus on building fuller relationships with their clients.
Yeah.
Remember that surge in business checking balances?
Right.
That wasn't just a coincidence. They've been actively encouraging clients to integrate deposit accounts, and it's paying off big time.
That 46% jump in business checking balances is incredible. They went from practically nothing to $212 million in just a year. Talk about a success story.
Yeah.
What's the draw for the customers?
It's all about convenience and creating a one-stop shop for their financial needs. Live Oak is demonstrating that customers are hungry for more holistic banking experience.
Yeah.
And for Live Oak, it means more stable, lower-cost funding.
So it's a win-win situation. They get loyal customers and a cheaper source of funding. But attracting and retaining customers in this competitive market is no walk in the park.
Yeah.
How are they making it happen?
Well, for starters, they really understand the small business market. They're not just throwing generic banking solutions at their clients.
Yeah.
They're providing specialized expertise, speaking the language of entrepreneurs and understanding their challenges and aspirations.
It's like having a financial partner who truly gets you.
Exactly. They've built a reputation as a reliable partner, a champion for small business success. That resonates deeply with entrepreneurs, especially those who might feel ignored by the bigger players.
Right.
And let's not forget their embrace of technology, particularly AI.
Right. They're using AI to streamline processes, improve efficiency, and personalize the customer experience. It's what sets them apart from the traditional stuffy banks.
Absolutely. It's a forward-thinking approach that's attracting attention. Now, shifting gears for a moment, let's look at their net interest income and margin trends.
Sure. Let's talk numbers. As we know, Live Oak's margin compressed in Q4 after the Fed's rate cut in September. The deposit market was slow to react, which impacted their profitability in the short term.
However, they still managed to keep their net interest income stable compared to Q3 2024, which is quite a feat given the margin pressure. And remember, their strong loan growth outlook will continue to drive their net interest income moving forward.
That's reassuring. But what about that 3.5% margin target they've mentioned? Is that still within reach?
It's still on the table, but the timing might be pushed back a bit. It all hinges on the Fed's actions and the deposit market's response.
Right.
There are a lot of moving parts at play.
Speaking of the deposit market, it's been incredibly competitive. How is Live Oak attracting and retaining deposits in this challenging environment?
They're using a multi-pronged strategy.
Okay.
First, they're offering competitive rates, but they're also being cautious with their deposit betas, essentially how quickly they raise deposit rates in response to Fed changes.
Right.
It's a delicate balancing act.
Right. They need to attract deposits without breaking the bank, so to speak.
Exactly. Second, they're leveraging that growing checking account base to create stickier deposits. The more integrated a customer is, the less likely they are to jump ship when another bank offers a slightly higher rate.
Makes sense. So they're building loyalty through deeper relationships. What's the third prong of their strategy?
They're tapping into the CD market where repricing has been more responsive to Fed changes.
Okay.
This gives them a reliable source of funding without having to chase volatile money market rates. It's a smart, diversified approach.
It sounds like they've got all their bases covered now. Let's address the big question on everyone's mind, credit quality.
Right.
We've all heard about the uptick in defaults among SBA borrowers industry-wide. How is Live Oak handling this?
They're not immune to the trend, but they're taking a proactive approach.
Okay.
They've been identifying impairments early on and provisioning accordingly. Their reserve levels remain healthy. But they're also enhancing their servicing capabilities and working closely with borrowers to navigate these challenges.
So it's a blend of prudence and support.
Right.
They're not just writing off loans.
Right.
They're trying to find solutions that work for everyone.
Precisely. They recognize that sometimes it's about going beyond the traditional lending playbook and getting creative. For example, there was a self-storage customer who was facing financial difficulties.
Okay.
After a thorough review, Live Oak discovered that the customer hadn't increased their prices in over a decade.
Oh, wow.
They brought in an industry expert to advise the customer on implementing a price increase.
Wait, they brought in an expert for a customer who was struggling. That's amazing.
Yes, and it worked. This simple solution helped the borrower get back on track.
Wow.
It's a perfect illustration of Live Oak's commitment to going the extra mile for their clients.
It's more than just banking. It's about understanding their businesses, anticipating their needs, and being a true partner in their success.
Yeah.
Now, let's talk about their strategic growth initiatives, specifically their foray into small dollar SBA loans.
Right.
How is that going?
Their Live Oak Express platform has hit the ground running. They originated $125 million in small dollar loans in 2024, essentially from a standing start.
That's incredible growth. What's driving this success?
There's huge demand for small dollar loans, and Live Oak is filling that gap.
Hmm.
They have the expertise, the infrastructure, and the technology to originate and service these loans efficiently. Their new technology platform is a game changer,
Right.
automating many manual processes and allowing them to handle a higher volume of loans.
So it's all about leveraging technology to make things easier and more accessible for small businesses.
Exactly, and they're not stopping there.
Mm.
Live Oak is continuously investing in technology to stay ahead of the curve. They see it as a key enabler of their growth strategy.
It's clear they're a company that embraces innovation and pushes the boundaries of what's possible in banking. But let's not forget the other side of the equation, growing their deposit base.
Mhm.
How are they approaching that?
They're targeting a specific segment, businesses that already have a lending relationship with Live Oak.
Okay.
It's a smart move. They're leveraging existing relationships and offering these businesses a convenient and comprehensive banking solution.
So they're pitching themselves as a one-stop shop for all their financial needs, right?
Precisely, they're emphasizing the benefits of a deeper relationship with their bank, including personalized service and tailored solutions, and it's working. Their deposit base is growing rapidly, with a significant chunk coming from those business checking accounts.
It's a testament to their strategy and the value they're delivering now. Let's zoom in on their performance in Wilmington, North Carolina. It's like they're making a big play there.
Absolutely. They see Wilmington as a key growth market and are leveraging their local presence to become the go-to bank for small businesses in the area.
Hmm.
It's a combination of local expertise and personalized service.
So they're positioning themselves as the hometown bank that understands the unique needs of Wilmington businesses.
Exactly. It's a smart move, especially when many small businesses feel underserved by larger institutions. And they're not just talking the talk, they're walking the walk. They're hiring experienced bankers, expanding their branch network, and actively engaging with the local business community.
It's a multi-pronged approach designed to build brand awareness and loyalty. They're really going all in on Wilmington.
And it's showing results. They're seeing strong growth in Wilmington and are confident that this momentum will continue.
It sounds like they're well on their way to achieving their goal of becoming the dominant bank for small businesses in the area.
Yeah.
Now let's shift gears and talk about their expense management. They've done a remarkable job of controlling costs while still investing in growth.
Right.
How do they do it?
Well, they have a remarkably lean and agile organizational structure. They're not bogged down by bureaucracy, which allows them to make decisions quickly and efficiently. Plus, they've embraced technology to automate many of their processes, reducing manual labor costs and improving efficiency.
So technology is playing a dual role, improving efficiency and enhancing the customer experience.
Exactly. And let's not forget their company culture. They've instilled a sense of cost consciousness throughout the organization. Their employees are empowered to identify and implement cost-saving measures.
It sounds like a recipe for sustainable success. Now, let's turn our attention to their capital management. They seem to be well capitalized, which is a good sign for future growth.
Absolutely. Live Oak has a strong capital position, which is crucial for any bank,
Right.
but especially one that's growing as quickly as they are.
How do they approach capital allocation?
They prioritize investments that will drive sustainable growth while also ensuring they have adequate capital to support their operations and manage risk.
Okay.
It's all about finding that sweet spot between investing for the future and maintaining financial stability.
So they're not just throwing money at every shiny new opportunity that comes along.
Definitely not. They're being strategic and making sure they have the resources to weather any storms that might come their way. Their strong capital position gives them the flexibility to pursue growth opportunities and navigate economic cycles, which is a huge advantage in today's uncertain world.
Now, before we wrap up this part of our deep dive, let's touch on their risk management framework. Every bank needs a solid plan to identify and manage risk, and it sounds like Live Oak has developed a sophisticated system.
Their risk management framework is incredibly thorough, covering all aspects of their business. They have a robust credit risk management process, which includes rigorous underwriting standards, ongoing portfolio monitoring, and a proactive approach to problem loan management.
That's crucial, especially given their focus on lending to small businesses, which can be inherently riskier than lending to larger, more established companies.
Absolutely. And they also have sophisticated interest rate risk management processes in place to mitigate the impact of fluctuating interest rates on their profitability.
Given the current rate environment, that's particularly important.
It certainly is. So they're not just thinking about credit risk, but also the broader economic factors that could impact their business.
Right.
Exactly. They're taking a holistic approach to risk management, which includes a comprehensive operational risk management process to identify and mitigate risks related to their operations, including cybersecurity threats.
It sounds like they're covering all their bases, which is reassuring for investors and customers alike.
Absolutely. And they're not just setting these processes in motion and forgetting about them. Their risk management framework is constantly evolving to keep pace with the changing risk landscape. It's all about being proactive and staying ahead of the curve.
That's great to hear. It sounds like Live Oak is really committed to building a sustainable and resilient business for the long haul. Now, let's take a quick break, and when we come back, we'll delve even deeper into their financial performance, technology, investments, and plans for the future. Stay tuned.
Welcome back to Talk Tickers, everyone. Before the break, we were just wrapping up talking about Live Oak's impressive risk management framework.
Right.
Now let's shift gears a bit and delve deeper into their financial performance, specifically their loan and deposit growth.
Yeah, those numbers were really eye-catching.
Yeah?
Their consistent growth throughout 2024 is pretty remarkable, especially when you consider the overall industry trends.
Absolutely. Their loan balances grew an impressive 4% quarter over quarter and a whopping 17% year over year. It really highlights their strategic focus on small business lending, a sector that many other banks are neglecting.
Yeah, and it's not just about loan growth either.
Right.
They also managed to achieve a 1% growth in customer deposit balances quarter over quarter, which is pretty significant considering how fierce the competition for deposits is right now.
Yeah, Q4 is typically a challenging period for deposit growth,
Right.
but their strategic emphasis on those business checking accounts has really paid off, bolstering their deposit base and mitigating the impact of rising interest rates. It's a smart, forward-thinking approach that's giving them a real edge.
Let's talk about those interest rates and their impact on Live Oak's net interest income and margin.
Okay.
We know they faced some headwinds in Q4 because of the Fed's rate cut in September, but they seem to be handling it pretty well.
They are, despite an 18 basis point compression in their net interest margin.
Okay.
Their net interest income remains stable compared to Q3 2024 and saw a 9% increase year over year. This really demonstrates their ability to effectively manage interest rate risk and continue driving profitability.
Their commitment to maintaining strong loan production yields, which are currently around 8.5%, is definitely helping them navigate these rate fluctuations. And it's encouraging to see that their new loan production yields are about 100 basis points higher than their existing portfolio yield, which sits around 7.5%. That's a great sign for future earnings.
I agree. It's a clear indicator that they're being disciplined with their underwriting and pricing strategies. They're not just chasing growth at any cost. They're focused on maintaining profitability. That's a sign of a well-managed bank.
Yeah, and they're keeping a close eye on their deposit costs as well. Their blended cost of funds for Q4 2024 was around 2.47%, which is significantly lower than the overall industry average.
Yeah.
It shows they're being strategic about attracting lower cost deposits.
Exactly. And a lot of that success can be attributed to their focus on those business checking accounts, which tend to be a more stable and lower cost source of funding.
Okay, let's shift our focus to the secondary market for government-guaranteed SBA loans. Live Oak has been quite active in this market, and it seems to be working in their favor.
It is. The demand for SBA loans in the secondary market remains strong, providing Live Oak with consistent gain on sale revenue. They're essentially selling a portion of their loans to other investors, which frees up liquidity for them to make even more loans.
Okay.
It's a clever way to recycle capital and fuel their growth.
It's like a win-win situation.
Yeah.
They generate revenue from those loan sales and can use those funds to expand their lending activities even further.
Exactly. Their loan sales volume has steadily increased throughout the year, reaching $278 million in Q4 2024, with an average premium of 7%.
Wow, that's a pretty healthy profit margin.
Right.
Now let's turn our attention to expense management, another area where Live Oak seems to excel.
Okay.
They've managed to keep expenses under control, which is impressive considering their rapid growth.
It is. They've demonstrated remarkable discipline, especially considering they added 62 full-time equivalent employees,
Wow.
primarily in revenue generating and funding growth sectors, as well as bolstering their risk and technology teams.
It sounds like they're being very strategic about where they're allocating resources, making sure they're investing in areas that will support their growth trajectory.
Exactly. They're walking that tightrope between investing for the future and maintaining financial discipline. It's a balancing act that not all banks are able to pull off. Now, let's delve into their provision expense, which increased in the second half of 2024. This was largely driven by that industry-wide trend of rising defaults among SBA borrowers.
Right, so while they're doing better than most when it comes to credit quality, they're not completely immune to the challenges facing the small business sector.
Right, and they're being proactive about it. They've been building their reserves to prepare for potential losses, and they're working closely with borrowers who are struggling to make their payments.
Okay.
Their reserve levels are robust, covering their unguaranteed loan portfolio adequately.
That's reassuring to see they're taking a prudent approach.
Right.
And their strong capital position, which is well above regulatory requirements, also reinforces their ability to absorb potential losses and support their continued growth.
Absolutely. That capital strength is like a safety net, allowing them to weather economic storms and continue lending to small businesses even when times get tough. It's a key differentiator for them in the market.
Let's talk about Live Oak's small dollar SBA lending initiative. This seems to be a particularly exciting area of growth for them.
It is their Live Oak Express platform, which they launched specifically for small dollar loans, has gained incredible traction.
Right, they originated $125 million in small dollar loans in 2024, starting from virtually zero. That's pretty phenomenal growth for a new product.
It is.
What's driving this success?
Well, for starters, there's huge unmet demand for small dollar loans. Many small businesses struggle to get funding for smaller amounts, and traditional banks often aren't interested in making these types of loans. Live Oak saw this gap in the market and decided to fill it.
It's a great example of how they're identifying and serving niche markets that are often ignored by larger institutions.
Exactly, and their technology is playing a key role here. The Live Oak Express platform streamlines the entire process, making it easier and faster for small businesses to apply for and receive funding.
So it's a win-win situation.
Yeah.
Live Oak gets to tap into a new market, and small businesses get access to much-needed capital.
Precisely, and this is just the beginning.
Right.
Live Oak is constantly refining their technology and expanding their offerings, so I expect we'll see even more growth in this segment in the coming years.
Now let's talk about their efforts to deepen their relationships with existing borrowers, particularly their focus on those business checking accounts.
Okay.
This is another area where they're seeing tremendous success. They've managed to more than double the percentage of customers with both loan and deposit accounts. It's now at 14%, which is a huge jump from the end of 2023.
Right. They've completely transformed their deposit mix in just a year, going from virtually no business checking accounts to over 3,000 accounts with balances exceeding $212 million. It's remarkable. What's their strategy here?
Yeah, what's the secret sauce?
It's all about providing a more holistic banking experience. They're encouraging borrowers to open checking accounts, which not only makes banking more convenient for the customers, but also provides Live Oak with a more stable and cost-effective source of funding.
Makes sense. The more integrated a customer is with the bank, the more likely they are to stay.
Exactly. And the numbers speak for themselves. Over a third of their new loan customers in Q4 2024 also opened checking accounts. This strategy is clearly working.
It's a testament to their customer-centric approach and their ability to build lasting relationships. Now, let's talk about their plans for geographic expansion, specifically their focus on the Wilmington, North Carolina market.
This is a strategic move that I find particularly interesting.
Yeah?
They've identified a gap in the market for small business lending services in Wilmington and are positioning themselves as the go-to bank for local entrepreneurs.
It's a smart move to leverage their existing presence in Wilmington and build on their reputation as a small business champion. They're essentially becoming the hometown bank for these businesses, offering the personalized service and local expertise that larger institutions often lack.
Exactly. They're hiring experienced local bankers, expanding their branch network, and actively engaging with the community. It's clear they're committed to making a real impact in Wilmington and becoming an integral part of the local economy.
It's a strategy that aligns perfectly with their overall mission of supporting small businesses and fueling economic growth.
Absolutely. And their success in Wilmington could serve as a blueprint for expansion into other markets down the road.
Interesting.
They've proven they can effectively identify and capitalize on opportunities in underserved communities, which is a great sign for their long-term growth prospects. Now, let's shift gears and talk about their broader growth strategy, which seems to involve a mix of organic growth and strategic acquisitions.
Right. Their recent acquisitions have strategically broadened their reach into new markets and specialized lending segments, while their organic growth efforts have focused on deepening relationships with existing customers and expanding their product offerings. It's a multifaceted approach that positions them for continued success while diversifying their loan portfolio and mitigating risk.
I agree. And they're leveraging technology to streamline their operations and enhance the customer experience, which is a key differentiator in today's competitive market.
Their investments in artificial intelligence and machine learning are particularly exciting.
They
They're
are.
using these technologies to automate processes, personalize services, and improve risk management. It's a forward-thinking approach that sets them apart from traditional banks and positions them at the forefront of the digital banking revolution.
It is. And their focus on building a strong culture is also noteworthy.
Hmm.
They've created a work environment that fosters collaboration, innovation, and a deep commitment to customer service.
It's clear that they're not just focused on profits. They're also committed to creating a positive and supportive work environment for their employees.
Right.
They encourage open communication, empower employees to take ownership of their work, and provide opportunities for professional development.
It's a culture that's attracting and retaining top talent, which is essential for any company that wants to succeed in the long run.
Absolutely. But Live Oak has a number of things working in their favor.
Like what?
Well, for starters, they have a very thorough credit underwriting process. They carefully vet every borrower to make sure they're a good credit risk, and they're constantly monitoring their loan portfolio for signs of trouble.
So they're not just handing out loans willy-nilly. They're being very deliberate and cautious in their lending practices.
Exactly, and their strong capital position gives them a cushion to absorb potential losses. They're well capitalized, which means they have the financial resources to weather a storm.
That's reassuring to hear. What other risks should investors be aware of? Interest rate risk is another big one. When interest rates rise, banks can face pressure on their net interest margins.
Because their cost of funds goes up. But the interest they're earning on their loans may not increase at the same pace.
Right. And Live Oak has a large portfolio of fixed rate loans, which means that if interest rates rise sharply, their net interest margin could be squeezed.
That's definitely something to keep an eye on. Are there any other risks that we should be aware of?
Well, competition is always a risk in the banking industry. Live Oak faces competition from both traditional banks and fintech startups, and they need to constantly innovate to stay ahead of the curve.
It's a dynamic industry, and Live Oak can't afford to rest on its laurels.
Absolutely. And then there's always the risk of regulatory changes. The banking industry is heavily regulated, and new regulations could increase Live Oak's compliance costs or make it more difficult for them to do business.
That's a valid concern. So Live Oak faces a number of risks, but they also have a lot of things working in their favor.
Exactly. They have a strong management team, a solid business model, and a proven track record of success. And they're operating in a market with huge growth. Potential small businesses are the backbone of the American economy, and Live Oak is well positioned to capitalize on this trend.
Okay, so we've talked about the risks. Let's shift gears and talk about the opportunities. What are some of the key growth drivers for Live Oak going forward?
Well, continuing to expand their lending operations is a big one. They can do this by growing their existing loan products and by developing new products to meet the evolving needs of small businesses.
So innovation is key.
Right. They also have a huge opportunity to expand their deposit franchise. They've already had great success with their business checking accounts, but they can continue to grow this business by attracting new customers and deepening their relationships with existing ones.
Makes sense. And they can continue to invest in technology to improve their efficiency, enhance the customer experience, and stay ahead of the curve in terms of innovation. They're already doing a great job in this area, but they can't afford to let up.
Absolutely. The banking industry is becoming increasingly technology-driven, and Live Oak needs to stay at the forefront of this trend. Their investments in artificial intelligence and machine learning are particularly exciting, and I'm eager to see how they leverage these technologies to create even better experiences for their customers.
Okay, so lots of opportunities for growth. But let's not forget about Live Oak's commitment to social responsibility. They're not just focused on profits, they're also committed to making a positive impact on the world.
Right. Their commitment to environmental, social, and governance ESG principles is a core part of their identity, and it's something that sets them apart from many other banks. They're taking concrete steps to reduce their environmental footprint, promote diversity and inclusion, and support their local communities.
It's inspiring to see a company that's so committed to doing good while also doing well.
Absolutely. It's clear that they believe that business can be a force for good in the world, and they're putting their money where their mouth is.
Well, it's been a pleasure diving deep into Live Oak Bankshares with you today. They're a fascinating company with a bright future.
I agree. They're definitely a company to watch.
All right, folks, that wraps up our deep dive into Live Oak Bankshares for this week's episode of Talk Tickers. Thanks for tuning in, and we'll catch you next time.
See ya!